Good afternoon. Daniel here, your tutor. Today we're looking at stock valuation. Okay, and here we come. Okay, so today we're looking at stock valuation. And just from the beginning here, I need to mention that stock is valued as cost. Stock is valued valued at cost. Okay, valued at cost. And there are three methods of valuing stock. Number one that we'll look at is FIFO. Okay, FIFO means the stock that you buy first should be the first one to be sold out. So I'll be saying first in, first out. Meaning that the stock that you bought first should be the first one to be issued out. Number two method is LIFO. This means that the stock that came in last in, should be the first one to be issued out, first out. Number three is the weighted average method. Okay, so we're going to look at FIFO. Okay, we're going to look at FIFO. Method first. Okay, to demonstrate how FIFO method of stocks work, we're going to look at this question here. Okay, so we have this question here which says Daniel Daka is an accountant working for Zambook Center. He is in charge of inventory management for ZNBC, and one of the books he keeps in inventory is a receipt book used by different districts in his territory. Mr. Daka conducted an inventory taking on December 31st, 2021 in the presence of the external auditors, and it was discovered that Mr. Daniel Daka's bill had showing that he had 500 receipt books, while the actual receipt book counted were only 450 at a total cost of $4,500. Auditors requested that the organization to amend the record accordingly to ensure that there were no misstatements in the inventory records. Your supervisor has provided you with additional transaction for the month of January 2022, as indicated below. So these are the transactions that happened in the month of January 2022. Required, calculate the value of the closing inventory of receipt book for ZBC for the period ending 1st January 2022. One, using first in, first out, which is FIFO. Okay, so this is the way we'll go about solving this problem. We'll have a column here for debt, and then the column for purchases, and then the column for issued, and then we have a column for balances. Okay. Under purchases column, we have column for quantity, and then have the column for price. Also column for issue, you have the column for quantity, column for prices. Same here, you have the column for quantity, column for prices, and the column for value. So you have value here, you have price, value. Okay. So we begin looking at the question. We are told on the 31st December 2021, the count was conducted, and the count sheet shows the following. Stock counted was 450 at a total cost of 4,500. Okay, that would be our opening balance in the month of January 2022. So on the 1st of January 2022, we have stock. The quantity is 450. The value of it is 4,500. For us, we need to find the price. So we have stock. The value is 4,500. The quantity is 450. How do we find the price? We divide the quantity into the value of stock. So this will be $10. Okay. This is our opening balance. Okay. The next transactions happened on the 5th of January. We purchased stock, quantity 2,000. The value of the stock was 24,000. So on the 5th of January 2022, we drop down this one as our opening balance, which is 450, with its price, and the value is 45. Okay. On this same day, we purchased stock, and we purchased 2,000 units. Okay. The value of it is 24,000. 24,000. What is the price? You divide 24,000 by 2. The price is $12. Okay. You bring it here on the balances column. The quantity is 2,000. 2,000. The price is 12 kwacha. You multiply this to give you 24,000 kwacha. $24,000. All this transaction happened on the 5th of January. The next transaction happened on the 10th of January. We happened to sell 1,000 units. Okay, so on the 10th of January, 2022, we issued out stock of 1,500 units. Now, remember that the method we're using to value our stock here is FiFO, which says the first stock that came should be the last one to be sold. Okay, so if you look at the stock that we have on the 5th of January, we have two batches. One batch, we have a batch of 450 at $10, and then we have also one batch which is 2,000 at $12. So using the principles of FIFO, we will dispose stock from the batch of 450 first because it was the first stock that was bought. So we issue from this column here for issued stock. So we have 450. We issue it out. This stock is valued at $10. If we multiply, it gives you 4,500. Remember, the total number of items that we need to issue out is 1,500. From 1,500, we have given the customer 450. So you say 1,500 minus 450. It means the quantity that has remained to be given to a customer is 1,050. This stock, we are getting it from a batch which is valued at $12. So this will be 4,600. Okay, you can close this one. Okay, so we have issued stock the quantity of 1,500 from these batches here. So we have issued the 450, the only batch that has remained is this one. So from the batch of 2,000 minus 1050, we have 950. Okay, this stock is valued at 12 kwacha. Okay, 12 kwacha times 950. Okay, 950. 11,400. Okay. The next date that we have is on the 15th of January. We purchase 3,000 units. The value of it is 45,000. So you go on the 15th. On the 15th of January, 2022. The opening balance on the 15th of January is 950. This stock is valued at $12. The value of it is 11,400. On this date, we bought more stock. We bought 3,000 quantity. The value of it was $45,000. $45,000. Okay. We need to find the price. So if the total value is 45, the quantity is 3,000. You divide 3,000, you get $15. Okay. Therefore, bring it here. You have 3,000 quantity at $15. The value is $45,000. We continue from here. The date column is here. The purchase column is here. The issuing column is here. And the balance is here. So here we have the column for quantity, the column for price, and the column for value. Same here. We have the column for quantity, the column for price, and the column for value. Same here. We have the column for quantity, the column for price, and the column for value. So the next date that we're looking at is on the 20th of January, where we bought 500 items. So we come here. Before you record this transaction, check first your books. What will be the opening balance of your stock as at 20th January? Okay, so on the 20th of January 2022, you have balances here. Your balances the first one will be 950. 950. This stock is valued at $12. Its value is 11,400. Apart from that, you have another batch of 3,000 valued at 15, 45, 45. Okay, and on this same date, we bought stock 500 items. We bought 500 items, and the value of it was $10,000. 500 items. We bought 500 items. The value of it was $10,000. We need to find the price. So if 500 units are worth 10,000, so you say 10,000 divided by 500. It means the price of this stock from this bank is $20. You have 500 at 20. This gives 10,000. You close this day. We have taken note of all our stock. The next date is the 29th of January. We sold 2,500 units. 20th of January 2022, we sold 2,500 units. You come to the column for selling, which is here. Remember, the principle we're using to value our stock is FIFO, first come, first out. So if you look at the batches of stock that we have here, on the 20th, we have one batch which has 950 units. Using the principles of FIFO, this is the batch that was supposed to sell first, 950, and this batch, all the units there, each is valued at $12. If you multiply 950 by 12, to give you 11,400. From there, remember the total units that we are selling is 2,500. From 2,500, we have given the customer 950. It means the quantity that has remained to give the customer is 1,550. And this quantity, we are getting it from the batch of 3,000, and that stock is valued at 12, at 15, pardon me, $15. So you multiply the 15 times 1,550, gives you 23,250. Okay, this is equal to 2,500 units that the customer wants. Once that is done, check the quantity of your stock that has remained. We have disposed this batch of 950, and from the batch of 3,000 here, we have sold 1,550. So you have 3,000 minus 1,550. It means from this batch of 3,000, we have remained with 1,450. Okay, at $15 each, this will give us 21,750. This batch of 500 is untouched, is still the same, 500 at $20, giving us 10,000. This is this is on the 29th of January This is on the 29th of January. It therefore means that the closing stock using FiFO will the closing stock that will be used in the profit and loss, and also that what will appear in the balance sheet is 21,750 plus 10,000, which will be 31,750. But remember that from the question here, we are told that initially the records were showing that there is 500 receipt book, but when the count was done, we were told that the quantity that was counted was 450. So we have 50 receipt book missing. Okay, it's therefore that the accountant will record the missing stock, of 50 receipt book at the price at which they are recorded. They are recorded at $10. At $10 as an expense. This will be an expense. Okay. So in order for us to have this value here of 31,750, to mean therefore that 500 loss has been taken care of for the fact that we, from the beginning of valuing stock using FiFO, we use a quantity of 450 instead of a 500, and for that doing, we've taken note of the missing stock of 50 receipt book. That's it for today. Check the next video as we look at LIFO, and thereafter we'll look at the average weighted method. That's your tutor Daniel, bringing your accounting to your home. Thank you very much.